Good morning, natural gas. It's Thursday, January 22nd, 2026. I'm Tim Beggins, president of Elk Trading Company. And natural gas prices for the spot February contract are up yet again. Three solid bars to the upside on this massive short squeeze with the coldest weather we've seen possibly in 80 years. Currently, right now, prices are trading at 5.5560, up 68.1 cents or over 14% for the February contract. Now, remember, Tuesday is option expiration, Wednesday is futures expiration, and Thursday we get the largest storage withdrawal. Celsius Energy going with minus 370. That would be a record. So let's take a look at the hourly chart. And here's the 13 and 48 period exponential moving averages. We did dip below that 13 period exponential moving average. So we've got to be a little careful here. Are we losing upside momentum? The weather forecast still looks strong, but we're talking about February. This is a February contract, not just January spot cash prices. So let's take a look at the front to back spreads. And here's the Jan versus the April contract. This is Jan 27 versus April 26. This is the injection spread. And look what's happening. We've had two massive bars down, but now today we're sitting only 8 ticks lower, less than 1%. And what does that mean? We may be waning here on further downside on this particular spread. So the marketplace is starting to look past this cold weather, which may last into the first half of February, and starting to look at the injection season. It needs a big spread to incentivize injections into storage. So be careful. This is the anchored volume profile, and it shows that we've got a lot of value right here in this area around this 130 to 125 area. The RSI still negative, but it is trying to turn up here. So we've got to be careful that we've got some value on the board once the cold weather disappears. And let's turn to the April through October strip. And currently right now, we are strong. We are currently trading at 380.270, up 12.2 cents or over 3.3%. The RSI is still positive to the upside. As you can see, this was the old low down here at 325. This is the value area at 360. We're pushing back out again. Again, we got as high as 431.60 way back in early December. Looks like we're trying to push out here at this time. So let's turn to the option expiration on Tuesday. Here's the strikes for the February contract. And as you can see right here, they are pulling off those February $5 calls. They were adding a little bit at 550, but we're at that strike today, and they were adding up here at 575, but they were reducing everything at $6 and at $7. So what we got? Well, we have more fuel to the upside because of these options, especially at the $6 strike, which we may try to get tomorrow because we've got weekend risk that the weather turns even colder. It also could turn warmer, but we're not so sure. It looks like this weather stays in here for at least the first week of February. What's our critical level for ERCOT? This is a snapshot for the 6 days, and it's Monday at 8 a.m. This means we've got less than 10,000 megawatts in actual reserve at the time this is forecasted. So we've got a critical area right at 8 a.m. on Monday morning when temperatures are going to be very, very cold. And let's take a look at the weather for the US. This is the wind chill factor. This is the European model. And currently right now, it's obviously very cold in the upper Midwest all the way out to New England. Let's take a look as we go forward. This is the 26th. This is Monday. And look what we've got. 13 degrees down here in Houston, minus 26 wind chill in Chicago, and it's up to 24 in New York City, just barely because of this warm water offshore. So this is very cold. And as we go through the forecast here, all the way through the 31st, this is some more cold air that's coming back down here around the end of the month. And that pushes all the way into Texas again. This is the European model. Back into Houston, down to 9 degrees, minus 6 in Chicago, and it looks like minus 4 in New York City. What happens here is we get further and further on the model. This is all the way out to February 2nd, it looks like it's just contained up in the Great Lakes, New England, and Mid-Atlantic states. So the marketplace may be looking out here and saying, okay, I don't know what February is going to start like, but let's see how long this cold lasts. And here's the temperature that we've got to be careful of in Midland. This is Midland, Texas, where the Permian region is. And look what's going on. We've got light rain tomorrow. We've got freezing rain on Saturday when temperatures start to dip as low as 12 degrees. The high is only 25. And then on Sunday, we're below 22 degrees the entire day, and it's cloudy. This means we could end up seeing some production losses here for the 24-hour period. Got to be a little careful. We're also going to lose wind turbines potentially because of the icing, and solar because of the cloudiness as well as the icing. Let's turn our attention to Europe, and this is where we are today. We've got colder temperatures in Eastern Europe and, of course, Turkey. As we move further and further into the forecast, this is the temperature anomaly map. We still are cold in Germany for tomorrow. We continue to push this out, but that cold air now centers around Spain as an anomaly, but most of this Arctic air is back into Russia. And as we move further and further toward the end of the month, it actually starts to warm up in parts of Eastern Europe. And the rest of Germany, France, and Spain, though, have periods of cooler than normal temperatures. But at the end of the month here, this is at the end of the forecast, February 5th, it's warm across much of the continent. And here's where Celsius Energy is looking at for European storage. Currently, we're at 49% full. This is a 2-day lag. And as you can see here, it is projecting that European storage right now to be 665 BCF in April 14th, I believe, for 2026. So it's going to be a very strong injection season for Europe. Let's turn to Asia. And this is also the temperature anomaly map. Very cold now here. Eastern provinces all the way through the Koreas and, yes, parts of Tokyo and Japan. So let's take a look at the forecast. This is similar to the United States. We got a brief period of warmer temperatures along the eastern provinces as we get toward the 25th, but then we get colder still again over in the Koreas, Japan, and of course this starts to come back into the eastern provinces of China back as we get into February the 1st. And it looks like we're getting more cold, February 4th into the 5th. That's the end of the forecast period. What about the United States nuclear fleet? Well, we've got one unit here. Edwin Hatch is down to basically 49.8%, or 50% is offline at this time. The rest of the fleet, less than 6% outages. And that means the total right now is 2.8 gigawatts. That's well within our 5-year range. We'll look to see if this continues, but right now we tend to move up in outages as we get through the season due to problems and maintenance. Let's turn to the stocks. These are the oil and gas E&P sector. These are stocks between $2 and $10 billion and have a high short float over 10%. And our winner here so far, BKV up 10.79%, CRK up 8.88%. Murphy, though, still lagging pretty hardly. And let's turn to, again, recapping the February natural gas prices up to $5.5280. That's plus 66.3 cents. Now up over 13.5%. We are getting close to Winter Storm Uri's anniversary. That was February 13th through the 17th. And here we are with a very big storm. So let's see what happens here on the forecast. Keep a careful eye on it. Watch this hourly chart here. Again, looks like it's wavering a little bit. We don't want to see 2 negative bars below that 13-period exponential moving average. So good luck out there. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you tomorrow.